Cancer is not a single disease. It is a genetic puzzle. And for the last 2 decades, one company has been building the most sophisticated laboratory in the world to solve that puzzle. You are looking at NeoGenomics. For a long time, investors looked at this stock and saw a low-margin lab business. But if you look at the documents we have analyzed today specifically, the transition from the challenging years of 2022 and 2023 into the operational excellence of 2024 and 2025, you will see a completely different picture. You will see a data company masquerading as a testing lab. Today, we are going deep into the investment thesis for NeoGenomics. We are not just looking at the stock chart. We are dissecting the operational turnaround that defined their 2025 fiscal year. We are going to analyze their dominance in the clinical services market, the high margin potential of their Pharma Services division, and why their shift toward next-generation sequencing NGS is the key to their future profitability. By the end of this video, you will understand why NeoGenomics is the pick-and-shovel play for the oncology revolution. Let's start with the financial backbone. To appreciate where NeoGenomics is today, we have to look back at the dark ages of 2022. The 10K from that year shows a company struggling with integration issues and bloating costs. But fast forward to the third quarter of 2025. The filing from October 28, 2025 tells a story of discipline. We see a consistent trend of revenue growth, but more importantly, an expansion in margins. The company successfully shifted its mix. They aren't just doing more tests, they are doing better tests, higher value, higher complexity tests that command higher reimbursement rates. This brings us to the first pillar of the bull. Thesis: clinical services dominance. NeoGenomics is not a generalist lab like Quest or LabCorp. They are pure-play oncology. When a pathologist in a community hospital gets a difficult cancer biopsy, they send it to NeoGenomics. Why? Because NeoGenomics has the largest menu of test offerings. In the 2024 and 2025 filings, we see a relentless increase in clinical test volume. But the secret sauce isn't volume, it's the revenue per test. Throughout 2025, we saw this metric inch upward. This is driven by the shift to NGS. Instead of running 10 cheap tests to find a mutation, doctors are running one comprehensive genetic panel. NeoGenomics captures more value, and the patient gets a faster diagnosis. It is a win-win that drives the unit. Economics seen in the latest quarterly reports. Now let's talk about the growth engine Pharma Services. This is the part of the business that excites institutional investors. Big pharmaceutical companies need data to develop new cancer drugs. They need to find specific patients with specific genetic mutations for their clinical trials. Who has that data? NeoGenomics. With their massive footprint in the clinical market, they have access to a treasure trove of patient data. The 2025 filings highlight the backlog and revenue growth in this segment. While it is smaller than the clinical side, the margins are significantly higher. This division effectively monetizes the company's relationships and data, creating a flywheel effect where the clinical business feeds the pharma business. We must also discuss the moat. In the 2023 and 2024 annual reports, management emphasized their tech-enabled strategy. This isn't just buzzwords. Integrating AI into pathology and informatics makes their lab more efficient and their data more valuable. The barrier to entry here is enormous. A competitor cannot simply buy equipment and compete. They need the years of validation data, the network of pathologists, and the trust of oncologists. NeoGenomics has spent 20 years building this infrastructure. The Q3 2025 report confirms that they are leveraging this infrastructure to drive operating leverage, meaning revenue is growing faster than expenses. Let's address the risks. The filings from 2022 through 2024 are riddled with mentions of reimbursement pressure and regulatory changes. The PAMA Act and changes in Medicare pricing are constant threats. However, by moving towards high-complexity proprietary tests, NeoGenomics insulates itself. It is easy to cut the price of a commodity blood test. It is much harder to cut the price of a specialized genetic panel that determines a life-saving therapy. Finally, looking at the balance sheet improvement throughout 2025, the company has successfully navigated its debt obligations and improved its cash flow position. The 10Q from November 2025 shows a company that is no longer burning cash to keep the lights on, but generating cash to invest in innovation. They are investing in minimal residual disease, MRD testing and liquid biopsies technologies that allow doctors to detect cancer, recurrence from a simple blood draw. So, when you put it all together, what do you have? You have a company that controls the most critical node in cancer care. You have a management team that has proven through the hard data of 2024 and 2025 that they can execute a turnaround, and you have a long runway of growth, fueled by the explosion of precision medicine. NeoGenomics has transformed from a recovering turnaround story into a fundamental compounder. The infrastructure is built, the network is active, and the war on cancer requires exactly what they are selling.